Yes, Bishan, we need.
Now I request all participants to put their right hand on their heart. We are playing ICAI motto song. Now I request Chairman of Ahmedabad branch, CA Fanil Shah, to give his opening remarks. Thank you.
Thank you, Bishan bhai. The keynote speaker for the day, Chitle sir, past president of ICAI. The very learned speaker for the day, CA Jitendra Karamchandani ji from Bombay. The regional council member and the chairman of the Committee of Auditing and Assurance of Ahmedabad branch, CA Chintan Patel. And you can say the creator of this whole webinar series. The secretary of branch, CA Bishan Shah, CA Jakin Shah and CA Jay Sheth, the coordinators for the series. And dear members, I welcome you all to this particular very first day, and to be very specific, the inaugural session of this virtual committee meeting webinar series on standards of auditing. Friends, when me and Chintan bhai were discussing that shall we have a series on the standards of auditing, then at that point of time Chintan bhai told that yes, we need to have now, because day by day the need of this auditing standards is increasing and also the responsibility is increasing. And this auditing standards help us on 4 phases of our auditing work. It starts with planning. It also helps in conducting the audit. It also helps us to keep a check on the same, and it keeps our hand till we complete the reporting of the same. And that's why nowadays the standards on auditing play a very pivotal role. And then Chintan bhai came out with a very good series where he told that we are going to have a discussion on basically briefing out each standard of audit, which are very important, focusing on SMPs, providing checklists so that they can start the work with. And that's how the whole series is drafted. So thank you, Chintan bhai, for having such a nice webinar series with so learned speaker and having a very right and apt keynote speaker for the day. No one else, that is CA past president sir, Chitle sir. With these words, and I would not take more of the time, but would just like to state that on this Saturday, we are also having a program, a very apt program with respect to MSME and the loan package which is being given. Soon the program will be launched, so you all can take the benefit of the same. With this brief words, now I request CA Chintan Patel to take the session ahead. Thank you.
Thank you so much, Chairman of the Ahmedabad branch, CA Fanil Shah, for putting a stepping stone in series, start of series. Yes, as Fanil bhai has shared that the auditing standards series has been always ignored for so many years. And when we look at the small middle-sized practitioner, it's believed that the standard of auditing are not for us. It's only for large-size listed company. However, friends, that is not the truth. It really applies to all auditing engagement, and it really helpful and useful to us like SMPs much more than for large-size companies. The auditing standards series is being classified into 4 buckets, where the standards have been divided into One on general principles and responsibilities. Second is on risk assessment module. Third is audit evidences, and fourth on reporting parts. So the focus is primarily not to go through the standards. However, along with the standards, we want to focus on the practical way, practical case studies, and the templates which is going to be useful to all the participants in during that day-to-day practice. Generally, standards series has been ignored, but this time I'm thankful to all the participants who are enthusiasm members of the branch that 300 registrations we have crossed. That is the highest number of registrations we can take as per the new guidelines of ICAI. So we need to really close our series of 300 registrations by way of this particular series. And for auditing standards, that's why the hats off to the members of the branch who really wants to learn, understand, and apply the auditing standards in their day-to-day practice. Friends, peer review also considers the documentation as one of the most important parts and also helps us in maintaining and ensuring that the system in our office is going on. So planning and documentation, these two are one of the two most important pillars for any auditing engagements. In main audit report, we are also putting a very important emphasis that we are compliant with the auditing standards. Additionally, Companies Act 2013 also requires us to comply with the auditing standards. So compliance with the auditing standard is not our choice. It is mandatory, and these auditing standards provide us guidelines and principles that need to be adhered by every practicing CA when they sign the audit report. And mind well, this is not only theoretical. This will help you to build your system. This will help you ensure that the staff and advocates who works for you in audit engagement, they really adhere to the principles, and when you sign, you can get satisfaction of work which is done appropriately. To start with this series, we do have one of the most important persons of our fraternity, CA Chitlere sir. He is a past president of ICAI and somebody like who is being known as a Dronacharya, Bhishma Pitama of the audit profession, which I just learned 2 days back when the CCM G. Sekharji called him Dronacharya and Bhishma Pitama of the profession. It is definitely a very, very important for us to have his words of wisdom, learning from his words of wisdom, and that's why we are thankful to Chitlere sir for giving this opportunity and address us. Now I request the coordinator of this session, CA Jakin Shah, to briefly introduce the keynote speaker, chief guest of this auditing series, Chitlere sir. Over to Jakin Shah.
Thank you, Chintan Bhai, for providing me opportunity to present such a wonderful personality. CA Fanil Shah, Chairman of the Ahmedabad branch, CA Bishan R. Shah, Secretary of the Ahmedabad branch, CA Chintan Patel, RCM and Chairman of this committee. Our keynote speaker, CA Chitlere sir, and the speaker, CA Jitendra Karamchandani ji. And my coordinator, co-coordinator is CA Jay Shet. I would like to welcome all of you, and I am proud privileged that I can represent before you the introduction of Mr. Chitlere sir. He is a past president of the Institute of ICAI. He has been president in 1997 and 98. He has been central council member for ICAI during 85 to 98. He was chairman of WIRC of ICAI during 84 to 85. He was a member of the International Auditing Practices Committee of the International Federation of Accounting during January 98 to June 2000. He is the managing partner of Mukund Chitlere & Company. He has more than 40 years of experience on advising companies on their business, financial, and strategic matters. He is widely regarded as an expert in accounting and auditing matters in India. His opinions are well sought on a variety of complex accounting and auditing matters. He has traveled extensively to more than 15 countries and has given more than 1,000 lectures on a variety of topics at national and international levels. He was the chairman of the National Advisory Committee on Accounting Standards, constituted by the Government of India from February 2011 to February 2013. He was the governing council member of Banking Codes and Standard Board of India, nominated by RBI from March 2006 to 2015. He was a member of the Company Law Advisory Committee of Government of India in 1992 and 93. He was a member of Advisory Board of Bank, Commercial and Financial Frauds appointed by Central Vigilance Commission from July 2007 to July 11. He is a member of Primary Advisory Marketing Committee of SEBI. He is the chairman of Standing Committee on Accounting issue constituted by the Insurance Regulatory Development Authority of India, that is IDA. He is the chairman of Principal PNB Asset Management Company Private Limited and serves as independent director on the boards of L&T Larsen & Turbo Limited, Larsen & Turbo Infotech Limited, Atul Limited, SL Propec Limited, SREC India Limited, RR Cable Limited, ONGC Petro Additions Limited, and Loda Developers Limited. Earlier, he was worked as an independent director on a number of companies such as ONGC, IDBI Bank Limited, LIC, Housing Finance Limited, SBI Mutual Fund. It's, even
Jagir, I think
all you
for
very
him,
short for
the list is endless. We have to have a separate session to really introduce Chidre sir. Sir, we welcome you here and thank you so much for your consent to address us. Please, over to Chidre sir.
Good evening. Thank you very much. I'm sorry, the person who's introducing me, I just requested him to stop because beyond a point, people get bored of listening. They wonder whether this person is in practice or he's only roaming around doing all other things. Well, friends, good evening. I must thank the Ahmedabad branch of WIRC for inviting me to share a few thoughts on this subject. Chintan Patel, WIRC member, Fenil Shah, chairman, Bhikshang Shah, secretary, and all committee members. I think on a working day at 5:30 in the evening, I can never visualize 300 people will register to attend to something called auditing standards. I think it's only COVID-19 which can do this. Now, all of us are going through the difficulties of COVID-19, and I think the Institute rightly has thought of making the best use of the time. I hope all of you are keeping safe wherever you are and taking care of your health. After me, the speaker for the day, Jitendra, will take you through various aspects which are allotted to him. And therefore, I think whatever I'm saying is going to encroach upon his time. So I am aware of the time limitation that is with me. But let me spend a few minutes on the basic subject itself. When we say auditing standards, and I think when you talk to any chartered accountant, most of them would feel that, look, I know it because I had studied them while I passed my CA. Now, thereafter, one wonders how many times one really looks at those standards. The book on income tax, the book on any other subject would be referred to many times. The book on accounting standards also might be referred to many times. But the book on auditing standards, how many people really refer to is a difficult question to answer. So I think I must appreciate all of you who are registered for this course, and let's spend a few minutes on generally understanding about auditing standards. There are two requests which I would have for all of you. Now that you are registered for this course, the first request is put all your concentration on this subject. The simple aspect is these are standards which appear to be quite simple, and you have to implement them in reality. Secondly, you also assume that you are going to implement them right tomorrow in any audit that you are doing. I think there is some misconception, as was initially pointed out, that these auditing standards are very relevant, very important only for big audits and not for small audits. I think that's not correct. Please look at the standard, start studying the standard as if you are going to do the audit with the help of these standards today, tomorrow, and you are going to do it. With that, I think your implementation mechanism will improve much better. So I think these are the two requests that I would have. And the last request is, normally whenever we listen to a program like this, what happens is there are PPTs which are available. Those PPTs are going to be made available subsequently, with the result that many people just do not take any notes of whatever they are listening. But I think the experience is normally it's only the notes that you take remain with you for a longer time. The PPTs are there, but sometimes you don't get the time to look at the PPTs again, and therefore it remains on your library but not in implementation stage. So wherever possible, if one starts the habit of making notes of what you like or dislike, I think that makes it better in the long run. With that, let's look at what are we doing. I think we are going to study some standards out of the total number of standards which are there, and these speakers will take you through various aspects of those standards, and more specifically, I believe, with reference to SMPs, that means small and medium size audits, small and medium size practitioners. Now, the number of standards we are covered and the number of standards not covered are quite large. And therefore, once you finish the course, you might have to go back to the book and find out which are the other standards which you need to brush up yourself. The first important standard which I would suggest is standard on quality control, which is like the mother document for all the standards. It's quite a bulky standard. I think that is the basis on which all of us do our practice of auditing standards. So I would request that kindly go through the standard to determine where do you stand in terms of various standards. Secondly, how does one study the standard? I think it is very nice that you're attending a lecture. The lecturers will give you various aspects of the standard. Now that will make you aware of two things. One is something which you know about and something which you do not know. And I think the objective of any program is always to know what I do not know. Because if I know something, I'm already knowing it. But if the speaker tells me something which I'm not knowing, I think I can take a note of it, go back to my office and start studying it. And I think the most practical way of studying auditing standards is by forming a small group, discussing the standards within the group so that you can understand it better. And I think that's the request I would make to many of you, that if you discuss the standards among smaller groups, it will make you better. Now let's look at what the standards talk about. I think broadly, as was rightly said in the beginning, they would talk about three aspects of the audit: pre-audit, audit process, and audit conclusions. I'm not trying to repeat all the standards, but I would say when you say pre-audit, the most important is the process for accepting an audit, the code of conduct which are necessary for communicating with the previous auditor, and various theoretical aspects which are given over there. And the other aspect which is important is, I think, the knowledge of the business. Nowadays, many times we we overlook this particular aspect. We believe that we know it. But I think it is very essential for us to understand the business in detail, understand the nuances and take note of it, so that when we do the audit, we can take care of the details of the subject very properly. The next is the audit process. Now, in the audit process, I think the planning for an audit is very, very important. And many times for a small size audit, I think this is one area which is not paid as much attention as it should be. You should know the size of the business. You should know the places where the business is carried on. You should know the people who are going to undertake the audit from your side and plan it in totality. I think if you do that, you would have done a big job to begin with. The next is, even when you are learning auditing standards, you may not be exactly doing the entire audit on yourself. So you would depend upon your team, maybe your assistants who are employees, article students, or any other person. And therefore, it is your job to train them properly. Because even if you know the standards best, and if your assistants do not know it, I think that's going to be a problem area for yourself. And therefore, it is your job to train them properly. So I think your dependence on your team is very, very high. Even in small audits, I think the use of technology has increased very much. So to the extent required, I think you may have to learn the technology which is necessary for conducting your audits. Continuous education is an absolute necessity. And lastly, standardizing your audit process is very, very essential. Because when you do an audit process, if you have a standard audit process, I think that will be really very useful. Once you conclude the audit, you are going to draft the audit report. Now, many times, what is the impression about audit report? And the impression is that it is the typist who will prepare the report. The last year's report is ready. You have to only change the year ending, look at whether profit or loss is there, and the report is ready. Now, in practical sense, this is what may be happening, but I would suggest you something else. Make the report available to you and start questioning each paragraph of the report. Initially, we are saying management responsibility. Now, find out why do we say management responsibility as the first, rather the second paragraph? Because the first paragraph talks about what we have done. The second paragraph talks about the management responsibility. I think if you question yourself as to why management responsibility is put, you will understand the standard better. The next is the auditor's responsibility. And I think the whole list of things are given as to what is the auditor's responsibility and what is it that you are doing. So you are communicating to the world at large, what is the work that you have done, and so on and so forth. The point that I'm trying to make is, once you start questioning the audit report, you will understand it much better rather than taking it as it comes to you. Over a period of time, what has happened is the audit reports were becoming comparatively routine, and therefore internationally what happened is they started developing what is known as key audit matter. And therefore I think those of you who are doing the listed company audits will understand that key audit matter is an important area started for the last 2 or 3 years. What is it that we are communicating? I think we are communicating the important aspects of audit on which the auditor has to spend extra attention, the efforts taken by the auditor to justify himself that he has done the audit, and these are communicated to the shareholders at large through the audit report. The next aspect which is important is the communication with those charged with governance. I think that's a very important standard. Even if you are doing an audit of a small and medium sized entity, the proprietor or partner, do we communicate to him? Do we communicate to the proprietor or partner what is the work that we have done? Do we communicate the important aspects that are relevant? I think that is very, very important. Your auditing standards also tell you that in the audit report, you have to report on internal financial control. I think any audit report has got annexure A for Caro report and annexure B for report on internal financial control. Somehow that report goes as a very normal report, but if you look at the report, you will find that that is the basis on which the entire auditing structure is based. So it's a very important report that you need to look at. And the last comes is the qualifications in the audit report. I think the qualification is not a matter of right for the auditor, it's an obligation. If you find something not to be correct, you are obliged to report the matter by way of a qualification. I won't extend the discussion on that subject, but I would say this is what is relevant. While the audit is carried on and once the audit is over, the most important aspect is the working paper file. I think many of us do not pay as much attention to the working paper file as we should. And therefore, when you have to base peer review or quality review, there are difficulties that we undergo. So I think conceptualizing the contents of working paper file, defining the working paper file and developing it is very, very essential. Now this COVID-19, has it made a difference in the auditing standards? That's another common subject which is raised in the present circumstances. I think the point is, COVID has not made a difference in the auditing standards, but COVID has forced the audit profession to relook at some of the standards and the process through which we can implement them. And while we are implementing the standards, the Institute rightly has come out with lots of guidelines, advisory on these standards. And I think it is very useful to read those things because it gives you a practical implementation guide of doing various things. Like if you are not able to do stock taking at the year end, how should you go about? If you are not able to send confirmations, what should you do? So I think these guidelines are in the form of advisories and they're very good. Now, lastly, in a few minutes, let me touch upon two more subjects, and that is the issues in auditing or issues arising on auditing, and then what is called a good audit. Is there something called a good audit? I think first is about the issues in auditing. The first and foremost is whether you have implemented auditing standards or not, it is very difficult for somebody else to evaluate because your audit report remains the same, whichever audit you are doing. And when I say you, it means me also, all of us. The audits that we do, our audit report is same. Suppose in the accounting standard something is not followed. In inventory valuation, suppose if I do not mention that the inventories are valued at cost or NRV, whichever is lower, any reader will understand that I have not implemented the standard in terms of disclosure. But in auditing, whether you have done the sales vouching or not, whether you have looked at the contracts or not, nobody can know, and therefore checking the implementation of auditing standards is more difficult. And in fact, that is a problem itself, because that means monitoring your performance as an auditor is very, very difficult till, unfortunately, you have to face an inquiry by the institute. Now, these are the two extremes that one is talking about. Most of us normally believe that I'm doing the audit rightly, and we do it completely. We keep our papers proper. But it's only when a disciplinary committee questions you for something, then you start looking at it. Or last few years, when the peer review comes to your reviewer comes to your office and starts looking at your file, you'll understand whether you're done it rightly or not. So I think this is one major difficulty in auditing, that monitoring performance is very, very difficult. Measurement of compliance with standards on auditing is extremely difficult. The next point is the expectation gap. I think there are two kinds of gaps. We are in the audit profession because we are rendering service. We are rendering service because the society expects us to receive audit report on the businesses in which people have invested money. And therefore, the society needs an assurance from the community of auditors that everything is proper. And that's the reason why audit is there in the country. What is it that the society expects? I think the society expects that once an audit report is received, there will be no fraud which will be existing in that audit entity. Is it true? I think the answer, unfortunately, is no. Why? Because the auditing standards do not undertake the responsibility of saying that we will ensure that no fraud exists in every audit that we do. And therefore, this is the first level of gap between the expectations of society and what the society is promised by the audit profession. This is one level of gap. The second level of gap is what the audit profession promises to deliver and what the profession actually delivers. Now, what is it that the audit profession promises to deliver? All that is given by the auditing standards. The auditing standards lay down that our auditors will do the audit in accordance with the auditing standards. Every audit report that we sign, we are saying we have complied with the auditing standards. We are laying down the whole process of audit. Now, this is our promise. And what is our performance? In case the performance is perfect, I think there will be no questions. But unfortunately, the performance is not as it should be expected. And the only reason I'm saying this is the institute comes out practically every year or every 2 years with a book called Commonly Found Mistakes in Published Annual Accounts. I think any one of you, or practically every one of you, must go through that book to find out what are the commonly found mistakes. One common example which I stated earlier about inventory valuation being done at cost or NRV, whichever is lower. One of the simplest things that we have learned in all these years is also found to be a commonly found mistake. I think a program on auditing standard we should all resolve that we will try and ensure that this gap is minimized and it is eliminated. The first type of gap between what the society expects and what the profession promises, I think let the institute handle with it. But the second gap between what the profession promises and what the profession delivers, I think that responsibility is on every one of us to see that we do it as per the standards so that this gap does not exist. And I think last few minutes, is there something called a good audit? I think the answers are very difficult. I was just trying to visualize what can be called a good audit or what can be called a good auditor. And a few characteristics I thought of. One is the quality of professional skepticism. I think that is a fundamental quality that every one of us must have. It does not mean we disbelieve everybody, but it means that whatever is heard or told to us, we question it, we evaluate it, and then we accept it. I think this is one quality which is very, very essential for a good auditor. The second one is compliance with the code of ethics. I think that is not a subject which is only for examination for 40 or 50 marks. That is a subject which is essential for every one of us to implement through all auditing standards. The next is the knowledge of the accounting standards. Someone who is a good accountant can only be a good auditor. I think those of us who do audit, if we believe that I need not know the accounting standard, I think you are doing a mistake. You must know the accounting standards very, very well. Then only you can do a proper audit. And therefore, I would say knowledge of the accounting standards is necessary. Similarly, knowledge of the auditing standards is necessary. And this program is the right step in that direction. The next few qualities I would mention are more of a human being rather than only as an auditor. One is you need to be a keen observer. Many places when you go for audit, you observe a lot of things. You go for a bank audit, you go for insurance audit. Are you really observing things that you are looking at? I think that would teach you a lot of things. You need to be a good listener. I think most of us are good talkers, but we need to be a good listener to make a good habit of listening to what is told to us. Independence is another quality which is very, very essential. It is an attitude of mind. Now, independence does not mean arrogance. I think many people believe as if independence is very close to arrogance. In fact, it means clarity without arrogance. You can be as soft as possible. You can be as mild as possible, but as long as you are firm on principles, I think that is what is independence. So you need to learn to be polite, but very firm on your principles. You need to be clear without being arrogant. I think the qualities of credibility, integrity, and honesty are very, very essential. Unfortunately, there is no thermometer by which you can use this or measure these qualities. But I can just give you an example that whenever you deal with somebody, every one of you understand the existence or otherwise of these qualities in the human being with which you are dealing with. And every one of us makes our own assumptions or calculations about how far the other person is credible, carries integrity, and carries honesty. You don't have to tell it out, spell it out clearly, but you make your own evaluation. I think that's how the other persons are also evaluating it. And I think the last point is you need to have a sense of ownership about these standards. If you feel that these are standards which are forced upon me by the institute and therefore I'm doing it, I think you can never be a good auditor. If you believe that these are standards which are laid down by the institute for my safety, for my security, and these are my standards, I believe you can implement them properly. So I would believe that in order to be a good quality auditor, you need to imbibe these habits. The entire course on auditing standards has been designed very nicely. There are very knowledgeable people who are going to take you through various auditing standards. They would tell you practically what to do, etc. The only request I would repeat is while you're on attending this program, I know you're attending the program from your house. The temptations of having a breakfast, jalebi, fafada will continue. I'm going to miss them since these people are not called me to Ahmedabad. They are only called me on a webinar. So you enjoy your jalebi and fafda, but please concentrate on the listenings that you're doing. Because I think voluntarily you're chosen to be a participant in this program. And therefore, the more attention that you give to this, I think you will be immensely benefited. I must end up by sincerely thanking the organizers for inviting me to be a part of this program. I wish them all the success. And I know that I have taken a lot of time from Jitendra Karamchandani, who is going to be our next speaker. But I'm sure he will try to cover it up in whatever time I have left with him for the remaining time. Thank you very much. Thanks to all. All the best to all of you. Thank you.
Thank you so much, sir. I think the amazing point which have been taken care by you, and the few points which I would like to highlight repeatedly for the benefit of members is one of the most important things is that checking implementation of the auditing standard is very difficult. And where it is difficult to check implementation of auditing standards, in that scenario, I think the onus on the auditors is very, very high. So I think, sir, you rightly pointed out that it is on us to ensure, and we have to carry the sense of ownership for us to ensure that we really comply with the auditing standards. Now we are fortunate enough to have along with us in our inaugural series the CCM from the C. Aniket Talati. I request CCM Aniket sir to please address the August gathering in this inaugural series.
Thank you so much, Chintan bhai. Most respected past president of our institute, somebody who I've had the honor and pleasure of knowing for so many years. And I think no better person, Chintan Bhai, you could have chosen to start this session. And I say it with all sincerity. Thank you, sir, for gracing this occasion. Chitle, sir. The honorable speaker for today, Jitendra ji, we look forward to your deliberations. Bishan Bhai, Fenil Bhai, and the team of Ahmedabad branch. I think sir has put the right perspective for this session in terms of what is the definition and rather the perceived definition also of a good auditor. So not just the substance, but also the appearance of a good auditor. Sir has shared the real life experiences. And sir, on the lighter note about the jalebi and fafda, I think that is something that we will hold for you. And next time you can travel to Ahmedabad, sir, we will ensure that you have not just the fafda jalebi, but all other delicacies that Ahmedabad has to offer. For my viewer friends, I can share with you, sir comes from Ville Parle, which is, his office is in Ville Parle, his residence also is in Ville Parle, which, believe me, is as close as Ahmedabad or Gujarat as any place in the world can be. So, sir, you are, at home even at where you are. But, sir, I think just 2-3 important points, Chintan Bhai, that I would like to share here at this juncture, especially for our participants, our chartered accountants. First is, why has the institute made the CPE hours mandatory on standards on auditing? And this is a council decision, not taken by a committee in particular. The most important reason for this that I would like to share with all of you, and I think some point of it, Chintan, you have mentioned that how do you judge the compliance of standard auditing? This was also what was the belief till last year that I had. But if you all simply go through the audit quality report that the NFRA recently published in one case, or how the government is now perceiving and looking at audits. And let's remember, large scale audits are not just subject to scrutiny by the FRRB at the institute or at the disciplinary mechanism. Now there are other regulators that are in play who are also looking at the quality of your audit. And how do you judge the quality of audit? The disclosure of your compliance with accounting standards or NDS is one part. But when they get to the substance of the audit, to see whether there was any, hand in gloves, that the auditor played a part in certain scam, which sometimes is a perception, sadly never turns out to be true in a lot of cases. But sadly, we have to accept the reality that in some cases, auditors have been found to be complacent. And how do you then as an auditor defend yourself saying that, no, I performed the minimum procedures that are expected of me. I did all of that with utmost diligence, and with the words are used, the independence that I had to have. And that independence, objectivity can be displayed through your compliance of these standards on auditing. So my request to all participants will be, don't take this as an additional burden that I have to comply with accounting standards. Now you want me to prepare a standards on auditing checklist, but look at this as a protective shield, the Suraksha Kavach that we like to call. Sir has been the president of our institute, presiding officer of the disciplinary committee, huge experience sir has had, and he will be one person who can tell you that in any disciplinary matter, if in fact you are to be proven not guilty, it is these very standards which will come to your rescue, because you can state that I use materiality based on the audit materiality standard of the institute. I did my planning based on the audit planning standards that were issued by the institute. I have collected the audit evidence as per the audit evidence standard. So these standards are actually there not to increase your burden or compliance, but to prove as a protective measure for you, to prove to and demonstrate to any third party very effectively that I have been in compliance of all that is required of me as an auditor. I did not do a forensic audit, but I actually only did a statutory audit where I was supposed to give reasonable assurance about that financial statements. I think somewhere, the common understanding between a review, an audit, and a forensic audit, which is a far different level, is not understood. And therefore, it becomes critical that through these standards on auditing, a minimum baseline of documentation of how you do and perform the audit is set. So my compliments and congratulations to everybody. I thought it was appropriate for me to mention why the institute is making auditing standards mandatory, and I'm sure that we will all take it up in that spirit, not just look at it, like I mentioned, as a checkbox or a tick box or a compliance burden, but something which is actually going to ensure that the quality of our audits improves. And more importantly, if tomorrow our audit was to come up for scrutiny, and just think of the levels of scrutiny that our audit today can go through. You have the peer review board of the institute, the statement of which we have recently changed in the council, huge changes being introduced in the peer review board. The QRB, that is a quality review board for listed companies. Then additionally, you have the NFRA, which is under the Companies Act. And God forbid, if there was a financial fraud, then the CBI, Enforcement Directorate, and SFIO will additionally scrutinize your audit. So 6 agencies looking at that one audit. And what is your safeguard? It is going to be these audit standards. So with these words, I compliment the branch for organizing this. But more importantly, I would like to thank once again our Honorable Past President, sir, for gracing this occasion. Apologies, sir, for joining late. I had a national webinar of another committee which I have just come to. But truly grateful, sir, for your virtual presence in Ahmedabad. And we look forward to your physical presence here very soon, sir. Thank you very much.
Thank you very much for being
Thank
here.
you so much.
I missed you in the beginning. Thank you. I
Thank you
finished.
so much, Aniket.
So,
Thank you so
sir,
much, Aniket, for sharing your the underlying objective of ICAI, why the audit standard has been made compulsory. But believe me, Aniket, that the members of Ahmedabad branch has wholeheartedly accepted this challenge, because the minimum compulsory hours are 2, but this series is of 8 hours, and 300 members of Ahmedabad branch has really registered for 8 hours. That shows the spirit of Ahmedabad branch to learn the audit standards. Now I request Secretary of Mission Visha. He has been one of the most important warriors of Ahmedabad branch, who has been fighting to see that everything goes perfectly in the series, to give word of thanks.
Thank you, Chintan Bhai. And on behalf of Ahmedabad branch of WIRC of ICAI, we are thankful to Chitale sir for giving his precious time and blessings to all of us, because I know he is the pioneer in framing these auditing standards, and to Aniket Bhai, our visionary and dynamic Central Council member, who is taking this again forward. These are auditing standards for all of us. So Aniket Bhai, thank you so much for joining here and giving your words of wisdom to us. So now, not taking much of time, I request Chintan Bhai to now take the charge of this series. Thank you very much. Thank you.
Thank you. I think we can now move out of the screen so that you can start the next session. Thank you.
Thank you, sir. Thank you.
Yeah.
Yes, sir. Sir, thank you so much. So this is what the really very important inaugural start by the two stalwarts, past president of ICAI, Chitale sir, and the CCM Aniket Talati. And now we are having the faculty of the session, technical session, C. Jitendra Karamchandani. I request the coordinator of this particular session, C. Jai Sheth, to briefly introduce the faculty of the session, Jitendra.
Thank you, Chintan Bhai, and good evening to all the participants and office bearers. I welcome you all on behalf of the Ahmedabad branch of WIRC of ICAI on the first day of Auditing Standards series. The first topic of the day is General Principles and Responsibilities, and for this topic, we have got the best speaker for the day, C. Jitendra Karamchandani, and it's my immense pleasure to introduce the speaker. C. Jitendra is a partner with Mukund M. Chitale and Company Chartered Accountants. He works in the assurance division at the firm in the domains of statutory audits and internal audits. He has a wide experience in audits, be it statutory internal management, covering multinational companies, manufacturing concerns, banks, insurance companies, mutual funds, and NBFCs. He is a fellow member of the ICAI and has also completed his education in MBA Finance. He is also a company secretary. He has done Bachelor of Law, LLB General, and also holds a bachelor's degree in commerce. He has been a contributor to the illustrative Ind AS financial statements books published by WIRC and has been giving the lectures on subjects of accounting and auditing on numerous occasions. So with this brief introduction, let's welcome the speaker of the session, C. Jitendra Karamchandani. Sir, you may please take over. Thank you.
Good evening, everyone. Before I start the session on auditing standards, I'd like to thank all the members of the Ahmedabad branch for providing me with this opportunity for speaking on auditing standards. So I'll take you through the course contents which we are going to go through for today. First is we'll go through quickly go through overview, because it's been already being spoken by the past in the past note. The standards which we'll be covering is from 200 to 299. with a special focus on audit documentation. We just heard about why audit documentation is very essential for the audit profession as a whole. So the two key auditing standards which we'll be focusing in the entire this is audit documentation, and the other one is very critical is communicating to those charged with governance. So this we spoke of. This is the entire overview of the engagement and quality control standards, the Motherhood Statement, which is standards on quality control. Then we have introductory standards 100 to 199. Then we have general principles and responsibilities 200 to 299, which we are going to cover in this session. And this other standards 300 to 399, 500 to 599, and others which deal with the audit process, risk assessment, assess risk, audit evidence, conclusion reporting will be covered in the subsequent sessions, which will be held at a later stage. Why is auditing standard important, which has been already been told, so I'll not try and repeat them. It is part of Companies Act. The opinion of the auditors matters a lot to the stakeholders. So now the stakeholders are not only the shareholders, you have the borrowers, you have the general public, and you have a entire nation which is a stakeholder for that company, because the growth of the company matters to the nation also. So the opinion of the auditors is very important for the stakeholders, and thus having an auditing standard and a commonality is very important. With the increased use of technology, auditing standards become more and more important, and what is being known is, because of this lockdown, there has been an increased use of technology by the companies and even by the auditors. And how should an audit happen in a technology environment has become more important, and thus the guidance by the auditing standards become very important. Auditing standards are not only applicable to statutory audit. The guidance provided by the tax audit, bank branch audit also places reliance on the auditing standards to a great extent. So it's applicable across various kind of audits. We are also moving to a complex business environment where the transactions are growing complex on a day-by-day basis. Thus, the guidance by the auditing standards becomes very important. Further, there are accounting standards and its continuous upgradations are evolving on a day-to-day basis. We are getting new audit accounting standards. Indian GAAP has been moved to Ind AS for certain set of companies and other entities. Then Ind AS is also getting evolved on a day-to-day basis. There are various judgments and technical applications of accounting standards which require evaluation by the auditors. Thus, the guidance by the auditing standards becomes relevant. The last thing which is already being spoken about, relevance of auditing standard from a compliance perspective, peer review, ethics board, and code of ethics. These are few abbreviations which we will be using as we go along each and other auditing standards. So the first standard which we take is more of a generic, which speaks about overall objectives of an independent audit and how should an audit be conducted in accordance with the auditing standard. So this is a general standard which speaks about on an overall statement which it makes. So it says that the audit should be conducted in such a fashion. Number one, it should be conducted in a way to comply with all the standards on auditing, and it also says that it should be conducted in such a fashion that it enhances the degree of confidence of intended users. So the objective while doing an audit should be the end result should increase the confidence of the intended users, and as it was already spoken about, the objective is to give a reasonable assurance and not a absolute assurance. So the standard says that the auditor should audit should be done in such a fashion that the auditor should obtain reasonable assurance that the financial statements are free from material misstatement, whether due to fraud or audit, and at the same time the audit evidence which is obtained should be sufficient and appropriate that the risk is reduced to an acceptable low level. And what does this mean? Let's take a small example. When we do a bank reconciliation statement, so ideally what the auditors do is they verify the bank balance as per books of accounts, the balance is verified as per bank statement, the unreconciled entries are looked into, the reasons are looked into, and the subsequent clearances are looked into. So this is a general audit procedure which usually in a small case of an audit we usually do. But if you have to reduce the risk to a very low level, what additionally would be required from an auditor is it should not only rely on the bank statements provided by the clients. An independent bank balance confirmation will enhance the audit evidence. At the same time, it will reduce at the risk. What is also required is professional skepticism, which means when we look at unreconciled entries or when we look at bank reconciliation, rather than only confirming that the balances match and the unreconciled entries are subsequently cleared, what should also be looked into is whether the reconciled entries are cleared at a regular intervals. If an auditor comes across any entries which are not cleared at regular intervals, or there's a huge time gap between issue of check and its subsequent clearance, or deposit of check and its clearance, a professional skepticism requires that an auditor should inquire the reasons for that, so that is any risk associated with that is cleared, and the audit risk is reduced to a subsequent level. Similarly, while verifying purchases or sales, usual tendency is to look at purchase invoices, sales invoices. We look at outward documents, inward documents, and stock documents. This is usual audit procedure. But if you want to reduce an audit risk to a very low level, what would also be required is confirmation of payable and receivable from a key vendors, which will also ensure that the counterparty has accepted the purchases and has accepted our payments, and in case of sales, they have accepted our goods. So confirmations in a way will greatly reduce the audit risk to a great extent. In case of inventory verification during COVID lockdown, there will be great challenges which an audit firm will face. So the Standard Institute has come out with an advisory what an auditor should do. So auditor can follow alternative procedures, because everyone knows that as of March 31st, 2020, the verification could not have been possible due to lockdown. So it has given guidance to the auditor that by following subsequent procedures, like it can verify inventory at the very moment the lockdown gets down, and by looking at subsequent inwards and outwards, it can go to a reverse calculation by verifying what the inventory could have been as of 31st March. At the same time, the auditing standards provides two other standards which are using a work of an expert or using a work of an internal auditor. So if the inventory has been verified by any of these two experts or the internal auditor, by following auditing standards, auditor can decide upon whether he can rely on the work of internal auditor or an external auditor. Another thing which the standard says is the concept of materiality has to be applied at the time of planning and performing an audit, and because this will ensure that the auditor focuses on key items of financial statements, and those key items should not have any uncorrected material misstatements. What this means is, at the planning stage, the auditor may not know what are the profits of the company or what should be the materiality. So the materiality can be different at the planning stage, but as and when the audit is performed, the materiality has to be reassessed, and based on the materiality, those aspects of financial statements which are key to the financial statements needs more attention of the auditor, so that there are no misstatements on those elements of the financial statements. The next aspect is the financial statements are the responsibility of the management, and those should have an oversight of those charged with governance. So these auditing standards do not impose responsibilities on the management of those charged with governance, and do not override laws and regulations that govern the responsibilities. So the standards do not prescribe what should be the management responsibilities of those charged with governance, because those responsibilities are provided by the law. So the Companies Act says the management and the board is responsibility for overview of the financial statement. The next aspect with the overall objectives of the standard is fair presentation versus compliance framework. So wherever a financial statement is prepared in accordance with some regulation, we use either fair presentation or compliance framework. So you will have your clients which sometimes come across to you and say that we need to do an audit for the purpose of specific purpose, maybe either to submit for a contract submission, or they need to file it with somebody, or for some other matter which is not in accordance with regulations. So it may not be in accordance with Companies Act, it may not be in accordance with some other act, but it's required for some other purpose. So the standard requires that the auditor will have to make sure whether he is giving a report on compliance framework or a presentation framework, because if you are preparing a financial statements under Companies Act, your opinion will be in a form of true and fair view of the financial statements. But if you prepare for some other purposes, the opinion usually goes that the financial statements are prepared in accordance with the presentation framework, and they are prepared in all material aspects. So this aspect, the while we do an audit for some other purpose may need attention of the auditors. Auditor needs to have professional judgment and professional skepticism. This we already spoke of. It has been also spoken that whenever an audit is done, professional judgment is involved, but at the same time there has to be professional skepticism. We took an example of bank reconciliation. The auditor shall the motherhood statement is also that the auditor should comply with the requirement of all the auditing standards unless the entire standard is not relevant or the requirement is not relevant because it is conditional. For example, there is a possibility that if the entity does not have a gratuity or a leave encashment liability, the entity will not use a expert in the form of an actuary. So that standard may not be relevant from an auditing perspective. So if an auditor does not take help of any expert, that standard may not be relevant. Otherwise, each other standard which is required for compliance has to be ensured by the auditor. The standard also says that if an objective is relevant for an auditor to follow auditing standards, and if he cannot follow that standard due to any reason, then the auditor should modify his opinion or withdraw from an engagement. Failure to achieve an objective represents a significant matter requiring documentation from a standard on documentation. What this means is when an auditor is not able to comply with any auditing standard, like you will come across many reports which have come out where the auditor has not been able to obtain audit evidence for documentation for inventory physical verification or any other matter. So you will see that those auditors are going ahead and providing emphasis of matter or they are qualifying opinion. But if the matter is of such a significant that the auditor cannot proceed with an order, the standard requires that the auditor should withdraw from an engagement. And you would have come across many resignations of auditors in the past year, and which the auditors have resigned, stating that they are not able to obtain reasonable evidence from a management in accordance with the auditing standards. You would have also come across many listed companies where the auditors have qualified accounts because the auditors were not provided with the evidence. The recent example is ILFS Group, whereby the auditors have qualified the accounts because the audit evidence which is required for providing an opinion could not be provided by the management. The next standard, so the earlier standard which we just spoke about, provides an overview what the auditor needs to follow while carrying out an audit. So when an audit starts, usually it's an arrangement between the company or an entity and between the auditor. So the arrangement usually should be documented in some form. So this standard deals with how should the auditor, what should the auditor do while documenting those terms of engagement. So this standard deals with what are the auditor's responsibility in agreeing the terms of audit engagement with the management and the preconditions for the audit. So the auditors the standard says that the auditor should continue and accept audit engagement only when it is established that the existence of preconditions of audit and confirm common understanding of terms of audit engagement between management, audit, and those charged with governance. What it really means is that the auditor should understand and establish that he has been appointed to do an audit. He has been appointed to do a specific audit in accordance with the regulations or in accordance with some other terms of reference, and he should confirm the understanding of the responsibilities of the auditor and the management by documenting in the form of an audit engagement, and the understanding should be common between the auditor and the management and between those charged with governance, because in many entities there is a concept of audit committee, there is a concept of board of directors, and there is a concept of an operating management. So the common understanding has to be between the auditor, management, and those charged with governance. The preconditions of an audit is the auditor should determine the acceptability of financial reporting framework. As I said, whether the auditing is under Companies Act or any other regulation or for any other purpose, the auditor should obtain and agree with the management that it's the management's responsibility that the preparation of financial statements is of the management in accordance with financial reporting framework. Internal controls are again the responsibility of management while preparing those financial statements, and the auditor will be provided all relevant information and unrestricted access to the auditor. The standard says that the auditor has to agree with the management before an audit starts that this is the responsibility of the management, and the management has agreed to provide all relevant information and unrestricted access to the auditor. The standard says so because it is possible that if the terms of engagement are not agreed in the start, it is possible that the management and the auditor may disagree at a later point of time, which will result in auditor qualifying the financial statements or withdrawing for the engagement. So the standard says the auditor should obtain all this information before the audit starts. The next is what are the usual examples of a contents of an engagement letter. The engagement letter should be addressed to whom? It should ideally be addressed to the board of directors of the company, or a proprietor, or a partner in a case of partnership, or a relevant authority in any other case. It should have a subject line and a date. Usually audit engagement letter is only after the auditor has been appointed, so it should ideally have a subject line and a date. The purpose of engagement letter has to be clearly stated to establish the terms of engagement and agreement between the auditor and the company. What is the purpose of objective of audit? Obviously, in case of a company audit, it is to give a true and fair view of the financial statements. In case the audit is conducted for some other purpose, the objective of audit has to be clearly established in the audit engagement letter, so that at a later stage, the management and the auditor should not have a conflicting views as to what was the purpose of the audit. The auditor should also spell out in the manner in which the audit will be conducted. This is very essential because in case of outstations audits, or in case of audits where the company has various branches, warehouses, registered offices elsewhere, and especially in case of lockdown, the auditor has to spell out the manner in which the audit will be conducted, when it will start, what is the team which will be supported, and how the audit will be conducted, what will be the use of technology, and all those other factors. Again, management responsibility we spoke of is a very critical matter which should be documented in the audit engagement letter. In many cases, the auditor may require use of an expert because there are few companies which have stocks which are very technical in nature. So if you have a construction industry, if you have a chemical industry, it is very difficult for an auditor of a finance background to really verify the stock verifications, because it may require an expert or a technical from a other background to help him in verifying the stock. So if the auditor is going to use an expert, it is better that that aspect is also documented in the audit engagement letter, so that at a later stage there is no conflict with the management. Working paper property of an auditor should be documented in the engagement letter, because it is quite possible that at a later stage management may ask or extracts of the working paper. So it is better that the auditor says to the management that the working papers are the property of the auditor, and as per law he may not be able to share with the management unless required by law or regulation. Use of information technology, as we spoke today, everything is being done on through information technology, and there is an expanded use of information technology. The auditor has to document various aspects in a way, what are the controls and the measures which the auditor is taking, so that the client's data is not mishandled or shared outside the auditing firm, and what are the controls which the auditor is playing, what is the responsibility of the management while sharing the information or through information technology. And all these aspects become very relevant, because today the use of technology has grown. So tomorrow management may come across to auditors saying that the controls were not proper at auditors, and so the management's information got shared with somebody else, or there has been a attack on the through information technology and all those aspects. So documentation of that in the audit engagement letter is very essential. The last and other aspect is the fees and other aspects, because this aspect also needs to be documented as part of audit engagement letter, so that there is no dispute at a later stage. The institute has come out with a sample format of audit engagement letter. What we will be doing is, after the presentation gets over, we have prepared an audit template which can be used by the auditors. They can use that as a template which has been shared by the institute. We'll be walking you through those templates, which says the format in which the usually audit engagement should be documented. The auditors are at a levy to add or modify those engagements to include matters which will be relevant from their perspective. The last part what we have done is documented, this was discussed in the peer review and audit quality review board. verifies various firms and documents what are the observations of non-compliance. So these are certain non-compliances which they observe when they did a peer review, when they did a quality review board for certain firms. They have said that the terms of engagement letter does not contain management responsibility, auditor's responsibility, and all those other aspects which we just spoke of. It has to be ensured that the audit engagement letter has to be different from any other engagement which the auditor conducts, because the terms of those engagement will be totally different. So usually it is a practice that other engagement letters should be separate from the audit engagement letter. It was also observed that the engagement letter was not addressed to those charged with governance. So it is very important because as I said, the management may be different from audit committee and the board of directors. So usually the highest authority is board of directors. So ideally it should be addressed to the board of directors. The last is not addressing audit engagement letter to appropriate person and not issuing engagement letter in respect of a treasury branch. So this was specifically with respect to one of the bank aspects. The next standard which we'll go through, again a theoretical standard and a standard which says what an auditor should do as far as quality control for audit of financial statements. So this standard is connected to the motherhood standard of standards on quality control 1. So this standard primarily says that the auditor has to implement quality control procedures at an engagement letter, which will ensure that the auditor complies with the professional standards and the regulatory and other legal matters. So it says that the auditor should have a quality document. So the quality document will lay down in the manner in which the auditor will do. So we all know that the audit is done with in accordance with the auditing standard. What this standard says is the auditor should document the entire audit process, right from appointment of by the client to the conclusion until the documentation issue of report. Whatever the process the auditor follows, that should be documented by the auditor, and what are the quality checks which have been laid down, that needs to be documented by the auditor. So few of the, again, it's a theoretical standard, as I said, it deals with what the quality and auditor should follow while doing an audit. So certain findings for the quality review board was that many firms did not maintain document process of observing, identifying, evaluating circumstances that can create a threat to independence. So firms had independent declaration, but they did not document by what process they are achieving at a conclusion that the audit team and the auditors involved are independent. The auditors did not document engagement quality control review. We will discuss that when we discuss audit documentation. So ECQR was not documented while performing objective evaluation and the judgments which were taken by the engagement team in conclusion. So what the audit team had done is they did the audit in accordance with auditing standards, but the manner in which the audit was done, that process was not documented by the auditing firm. This is a very key critical standard which we will be discussing in detail. Is audit documentation. We have heard across the entire sessions as to what auditing is, what the auditing standards should be followed. It is very difficult to prove whether the auditing standards have been followed or not, and what is auditor's shield in case there is any inquiry by the relevant regulatory authority. So for across all these standards, this is one standard which is very, very critical for every audit firm, may it be doing a large scale audit or a small scale audit. So the scope of the standard is very simple. It says this standard deals with the auditor's responsibility to prepare audit documents for audit of financial statements. It uses a simple line. It says the auditor should document whenever it does audit of financial statements in accordance with the standards on auditing. There is very less guidance in the standard as to what should be documented, because other standards at later point of time, when you will come across, when you go to those sessions, will provide you what auditor does and what it should document. But for the sake of convenience, what we have done is we have listed all the documents which an auditor ideally should document, which will give you an overview of what your start to end documentation should be. The scope also says that this is not only required for current audit. If you do an audit of any other purpose, historical financial information, that also should be documented. If there is any law or regulation which requires a specific documentation, then the auditor should also carry out that documentation. Now, what should be the logic or the objective of the documentation? That whatever you collate or whatever you write down in a documentation, whenever you provide it before any authority, or not also authority, your superiors, when they are reviewing the financial statements or reviewing your audit, it should be sufficient and appropriate record for forming the basis of audit report. So the audit report says that we have done audit in accordance with auditing standards, we have complied with all ethical requirements, and it says because of that we have a sufficient and appropriate evidence to provide an audit opinion of true and fair view. So your documentation should, by reading those documents, a reader should be able to say that these are enough documents. If I read these documents, I come to a conclusion that the auditing has been done in accordance with auditing standards, and this can form basis of audit report. The other aspect, again, I said the auditing, this standard speaks of the auditor should create documentation, when it should create documentation, and how should it create documentation. What should be documented will come in subsequent slide. The standard also says that documentation should be done on a timely basis. So it has given a leeway to the auditor that all your documentation, because it is quite possible that as you go along doing your auditing, the work is done simultaneously, but the documentation sometimes remains a time lag, or the collation of all the workings which you have done, you may not have arranged in a form which can make a relevance for the understandings. So the standard says, and the standard on SQC 1 also says, that a time limit of not more than 60 days from the issue of audit report, the auditing document should be ready. So this is not that you have a time limit of 60 days after issue of audit you can carry out procedures of auditing. It only says that you would have done your audit documentation separately for separate aspects. Only collation or arrangement of those documents in a fashion which will enable its proper understanding and its proper documentation, a 60 days window is given. So this does not imply that the audit evidence can be collated after an audit report has been issued. Again, there is no form, content, and extent of audit documentation. This standard has left to the judgment of an auditor that the audit documentation which will enable you in reaching to an audit conclusion, that should be sufficient. So it doesn't say in which form, soft copy, hard copy, you take all the hard prints, you verify only soft copy, in what fashion it should be shared, in what arrangement it should be there. The standard does not say that. So whatever is sufficient from an auditor's judgment, that should be documented. The next is of an assembly of an audit file. This we spoke of. It should be arranged within a specified time in a proper fashion. The auditor is not allowed to delete or discard any audit documentation before its retention period. If any modification is done to add or enhance what has been already documented, the same can be done only by specifying the reasons and by whom it was done, and it was reviewed by senior in charge. So it is quite possible that you would have documented something, but you feel that certain additional things should be documented because it will explain in detail what you have already documented. Then that can be done. The reasons have to be specified and whom it was done, and your senior has to review it. The retention period of audit documentation is not less than 7 years from the date of audit report. But again, as I said, this is why what is required by the auditing standards. If there is any other law or regulation which requires an auditor to keep a documentation beyond this retention period, auditor will have to keep it. Ownership of documentation, unless specified by law or regulation, the audit documentation is the property of the auditor. It can be shared only under specified circumstances if the law or regulations requires. The next part is the very critical part of this entire presentation, which I'm going to make for today. But what I've tried and done is I've tried and collated in the logical sequence usually what an auditing documentation or what a working paper file should contain, because usually when we speak of audit documentation, you will have other standards when they are spoken about. When those are spoken at different point of times, usually we are not able to visualize what my start and end of an audit documentation should be. So by taking institute's various guidance which has been given, we have plotted this in a which order usually the documentation should be. The first and foremost thing is a client information sheet. before an audit is taken, it is very important to we have a client information sheet. We should know about the client, whether it's a company, corporate, non-corporate, who are its owners, what are the directors, what is its business, where it is registered, are there any other offices, what are the other information about the company, because this will give an idea whether the firm should really deal with the client, what are the precautions it should take, and what is the knowledge, or whether it can do an audit of that client. So that's the first thing which should be documented in an audit documentation. The next thing is, before acceptance of an audit or before giving in willingness to an audit, the audit firm should know whether it is independent of the client. If the audit firm is not independent of the client, that assessment cannot happen after an audit has been accepted or after giving a willingness. So usually declaration of independence from the respective team members, engagement team, and the firm evaluation, that has to be documented. The next step is willingness to be appointed. That proposal of appointment has to be part of audit documentation. Many a times those willingness are shared through an email, but it is advisable and it is required that the proposal of appointment has to be documented as part of audit documentation. Consent and auditor's certificate, because in accordance with Companies Act, the auditors have to give a declaration that they are not disqualified by the various sections which says auditor is not indebted and all those other, not disqualified, or there is no case against the auditors, and those kind of consent which is given to a client, that has to be documented. The appointment letter by the client and the approval by the board of directors both has to be taken on record, because the management will issue an appointment letter, but the resolution of the board of directors is very important. That has to be documented as part of audit. Many a times in case of first appointment, the appointment is done by the board of directors, but usually an appointment of audit in case of expiry of term or in case of rotation is done by the shareholders. So copy of a resolution passed in the AGM has to be form part of documentation. Before accepting an audit, in accordance with ICAI Code of Conduct Ethics, NOC of previous auditor is required. So the copy of NOC from previous auditor along with auditors firms sending of that letter to the previous auditor, both has to be documented. After receipt of NOC, obviously the auditor will usually an auditor accepts an appointment. The acceptance letter, everything has to be documented. We spoke of engagement letter in the previous standard. Only acceptance of audit is not important. The auditor will have to document, issue an engagement letter, and that engagement letter has to be documented. SQC 1, Standards on Quality Control, also says that every auditor has to decide whether there is a requirement of engagement quality control review. So an engagement team and an audit team usually has a, you will have a team members, you will have a manager, you will have a senior manager, then you will have an engagement partner. But in case of certain companies, it's a listed company, it's compulsory, and certain other companies, based on a firm's policy, an engagement quality control review partner is also appointed, who looks after the quality control of the entire audit without really getting involved in the audit. So he only looks whether the firm has complied with all the quality requirements as are required by the auditing standards. Before an audit is started, usually in case of a recurring audit, it is important to document what are the opening critical issues. Usually if it's a new audit, the auditor can sit down with the management and identify what were the closing issues in the previous audit. In case of a recurring audit, this is a starting point which should happen. If the last year's closing issues should become this year's opening critical issues, so the auditor and the entire engagement team is aware as to what aspects are carried forward, and they need to look at it when they do the audit for the current year. Opening balance tracing, I'll not discuss on that. That's the first step which happens before an audit is started. Obviously, before an audit gets started, the auditor needs to assess what is the materiality level he needs to follow, what is the scope and the process of various key elements of financial statements. Usually in case of small audits, there's a tendency to start with substantive procedures whereby vouching and verification starts at an early stage, but as a process, if materiality is established even for low scale audits, the various elements of financial statements, the process of those statements, like it's very important to understand what is the process from sales to receivable of debtors, process from purchase to payment of credits, process of recording of expenses, and all other things. For key elements of financial statements, it's very important to document the process even if the audit is small. This enables the auditors to focus on key areas of financial statements. if there is a consolidation assignment along with the normal audit, group audit becomes relevant. The documentation of that becomes relevant. The next is many times an audit is also accompanied by an ICAI for assurance report. So that documentation as part of audit is also relevant. The first thing which an audit starts is you have a planning meeting with a client, but whenever planning meeting happens, usually a discussion happens. We discuss with the client, and before we start an audit, we usually have this meeting. The standards also require that the auditor should document what has been discussed in the planning meeting, what has been agreed upon, and what is the way ahead. The next step is usually an auditor gives a requirement list to the client auditee, and based on that also needs to be documented as part of your working paper file. Note on understanding of an entity. This, as we spoke upon, understanding of the business of a company or respective entity is very important. Thus, a note of that has to be forming part of your working paper file. Identification and assessment of fraud risk. The objective of audit is not to find out fraud in the financial statements. That's what the standard says. But still, it's very important that the auditors identify and assess whether there is a possibility of fraud risk and what could be those areas. So the auditors will not look for frauds, but if there is any identification, or auditor assesses that there could be a possibility, that identification and assessment has to be at the start of the audit. Usually an audit is entities audit financial statements are prepared on a going concern basis. However, before an audit starts, the auditor has to establish based on a going concern checklist that the audit will be done on a going concern basis. Again, audit timetable, I'll not dwell upon much upon that. Preliminary analytical review. This is very, very important because this gives a brief idea in a way which elements of the financial statements have moved drastically as compared to last year. Usually the accounts are prepared on a consistency basis, accrual basis. So usually you would not find material variations, but preliminary analytical review, so you will see change in inventory, debtors, creditors. That will give you an idea as to which elements of financial statements you need to focus, whether certain elements have undergone change, so that your focus areas can be accordingly directed upon. Information technology we spoke of, it's very relevant to document the various information technology environment in which the entity is operating. What are the software the entity is using? What is the accounting software? Are there any other softwares which the entity is relying, and how that environment is operating? Because in today's auditing scenario, we are relying to a great extent on digital evidence or the e-evidence. So it is very important for an auditor to understand in which environment the entity is operating, how does the software operate, what are the controls around it, and that entire understanding has to be documented. Again, in case of small entities, we usually go for a substantive audit procedures, but a small, medium to large scale entity, verifying on 100 basis is not possible. So usually the auditors rely on the internal controls of the entity. Thus, understanding and documenting of internal controls is very, very essential. Risk table and evaluation of an audit risk. After we have done so much evaluation, it is very important for the auditor to evaluate and document audit risk. Now, what is audit risk? The auditors may come to a conclusion that there is hardly any risk on the expense side, but on the revenue and sales side, that data collections are not coming frequently, the goods are getting rejected, and there is quality issue. So this is my key risk for this audit. So I'll focus more on revenue and this side. On the expense side, the controls are good. It is pre-verified. There are hardly any errors. There is no observation of internal audit. So auditor carries out various elements of financial statements, and he assigns audit risk and prepares a risk table. Process note on key financial statements areas we spoke of. You need to determine what are the key financial statements area and accordingly prepare a process note for that. If the statutory auditor decides to use the work of an internal auditor, he should document that. He should document the manner in which he is going to use the internal audit report summary. The next thing is documenting who is involved in the audit team and what are their responsibilities. So you will have article assistants, you will have assistants, you will have a assistant manager, senior manager, engagement partner, review partner. So what are each of the members' responsibility and what will they do? The documentation of that is very, very relevant. before an audit starts, it's very important the engagement team, the team which is going to work an audit, should have a engagement team discussion so that they can discuss what has been assessed before start of an audit, what needs to be done, what has been what has been the history of observations, and that discussion also needs to be documented. The next is audit strategy. Audit strategy obviously means following audit programs. What extent the audit is verification will be done, quantum of sampling will be done, how the misstatements and verification will be dealt upon. One of the requirements of auditing standards is that whenever an audit planning is done, that needs to be communicated with those charged with governance. So it is not that at the end the auditor needs to say to the board of directors that these are our observations and this is what is our audit conclusion. The standards also require that before an audit starts, it is important that the auditor communicates to the board of directors that this is our audit planning, these are our strategy for doing an audit, so that whatever is the experience of the board of directors, of if they have any reservations of looking at certain aspects, they can share their viewpoint. The next is use of expert service organization by the auditor management. If the auditor is using any expert or the management is using any expert in the form of actuary or any other expert, the manner in which auditor is using that services or how he is evaluating that work, that needs to be documented. These are various checklists which needs to be done, like audit program. As I said, once what happens is, since you look at various elements of financial statements, it is possible that an auditor may not be able to remember all items which need to be checked in accordance with the standards on auditing. Thus audit programs and the checklist helps auditor in concluding in an appropriate fashion. The auditor also needs to document legal compliance and taxation checklist, accounting standard checklist, schedule 3 checklist, notes on financials. Cutoff procedures is very important. Since the financial statements are prepared for a particular financial years, we usually look at certain entries after the financial year statements have, after the year has ended, so that the entries relating to book subsequently do not relate to these financial years. Those are known as cutoff procedures. That procedures also need to be documented. And after the entire audit is done, the auditors have to carry out a final analytical review, because you have done the entire audit, you have followed all the procedures, you have complied with all the auditing program checklists. But a final analytical review will give an auditor an assurance that he has reasons for why the amounts have changed from a last year, and if there have been material changes, what are the reasons for those changes. Tracing steps is looking at the closing trial balance amounts to the schedules and those schedules amounts to the financial statements. Once the audit has concluded, the auditor also has to document what are the closing critical issues, so that this could become the opening issues of the next year. Going concern checklist, the auditor evaluated at the start of audit that the entity is a going concern, but during the course of an audit, because of COVID also, you will come across few entities, the businesses have faced a substantial risk of continuity. So it is possible when you planned an audit, the audit was a going concern entity, but when you're closing it, or when you're going through after all your audit, you're coming to a conclusion that it may not be a going concern, it may require a mention in your audit report. Thus a going concern closing checklist is also important. You may come across misstatements during the course of audit, few which may have been rectified, few which may not have been rectified. Those also needs to be documented, because that will give you an idea of what is the internal control environment within an entity. The next is by review by a senior in charge. After all that is done, you have documented, your senior will review. Your observations of your senior in charge or the observations of your engagement partner, that also has to be documented. After the entire audit has happened, it is very important that you reassess your materiality level, because it is quite possible that when you start an audit, you thought that this materiality level is sufficient based on your past experience. But if you come across many misstatements which happen, or you're coming across which have happened, you may reassess your materiality level. If you reduce your materiality level, your level of checking substantive procedures will increase. So at the end of the audit, sometimes reassessing your materiality level is also important. Assignment completion checklists, which enables you that you have complied with all the requirements of standards on auditing, schedule 3, companies act, ICFR, CARO, and every other aspect. The last is audit report and related working papers. So it is not that only audit related documentation needs to be done. If any amounts which go in the audit report, or if you have qualified, if you have given emphasis of matter, if something has gone as other matters, the documentation in support of that also has to be form part of your working paper. The last is many entities have ICFR and CARO, so your CARO report and related checklist also needs to be documented as part of your audit. Management representation letter is very important documentation. There's a standard on management representation letter. I'll not go through on that standard, but that also needs to be documented. Many a times auditor gives a recommendation to the management after the audit has happened, that is known as management letter, and seeks reply of the management. That also needs to be documented. After the entire audit has happened and the auditor reaches to a draft audit opinion, and the financials are placed before audit committee or the board of directors, it is very important to communicate to those charged with governance. We'll go through in that separate slides what needs to be communicated, but that document also needs to be forming part of your audit documentation. Quality control on financial statements, as we said, once your audit is done, if you are subject to ECQR, your engagement quality control partner will verify whether your audit is done in accordance with standards on auditing, whether documentation is appropriate and all those things. And after all this has happened, one of the standards is also there that after even if the audit has happened, the auditor has to evaluate the subsequent events after the financial statements date, which is 31st March, and even after the audit report has been issued. So to see that whether there are any events which are adjusting events or non-adjusting events. If there are adjusting events, those need to be incorporated in the financial statements. If they are not non-adjusting events, those need to be reported by way of notes in financial statements or in the board of directors report. These are few instances which were reported in audit quality review. The non-compliances, that audit documentation was not done in detail, things were not documented, was not prepared on a timely basis, not assembled within 60 days, audit file has not been assembled. Deficiencies were there in form of cross-referencing, mentioning and all those things. Checklists have not been prepared, the engagement partner and the other partners have not signed off and all those kind of things. So does this, if you follow this kind of a documentation either in soft form or in the hard form, this will make sure that your audit is conducted in according with auditing standards, and this will also enable that to prove to you, to your seniors, or this can become an important document when you start an audit for the next financial year. This is broadly, QRB has come out with a what do they look when they want to do a quality review of the firm. So these are few points which we have already covered when we were discussing. So they want compliance with all the standards, compliance with all the accounting standards and all those kind of things. So whatever was discussed in our last slide, this is what the quality review board wants. What has also happened is NAFRA has come out with a draft procedure for submission of audit files. So our audit files are presently in a hard copy or in a soft form, but how do we submit it to relevant authority while relevant authority? So what NAFRA wants is, it wants you to do a scanned or e-filing of all the documents, arrange in a sequence the way we spoke of, right from acceptance till conclusion, number them, collate them, and then that entire e-document has to be submitted to NAFRA. So this is presently a draft procedure which has been submitted by NAFRA for public comments, but this is which may become order of day as we go ahead. They want entire audit documentation in a sequence, numbered, labeled, so that whenever reader looks at that documentation, he's able to look from the start till end, compliance with all standards, compliance with law and regulations, and it enables an easy understanding. Thus, it is order of the day that the documentation follows a proper procedure. So this is in detail what they have said. I'll not read para by para because the slides have been shared with you. At the end of it, we have shared with audit templates for various aspects which I spoke of. So the audit template, when we will go through, that captures all those aspects. The next standard is auditor's responsibility in relation to fraud in an audit of financial statements. So this standard says that the auditor is not responsible for auditing the fraud in the financial statements. Auditor's responsibility is only to ensure that he has taken all audit evidence so that risk of material misstatement is low, either due to fraud or due to error. So the auditing standard has just evaluated those aspects. It says that the auditor should assess risk of material misstatement, and obtain sufficient and appropriate audit evidence, and to appropriately document that. So let's take an example. When you do an inventory verification during a COVID procedure, an auditor will not start with an intention that the management has committed fraud. Certain inventory does not exist, but the management wants to show. But the standard says that the auditor should consider historically whether he has come across any this kind of a scenario whereby there has been a difference between a physical verification and a book record. So suppose historically the difference was say 10%, but this time the difference is 1%. So it is possible that historically the evidence was that the difference between book stock and physical stock was in the range of 10 to 15%, but this time it is only 1%. So the auditor will not conclude that it is fraud, but it gives an indication to the auditor that something may be going wrong. So the standard says that the auditor should evaluate if it can obtain additional audit evidence, so the risk of material misstatement is reduced. So the auditor will verify the reasons why the stock difference is less as compared to earlier years. The other aspects which the standard says that the auditor has to have professional skepticism. So what, the example which we took, the auditor cannot simply say, okay, the difference is 1%, but historically the difference was 10%, so it's okay, I'll accept the audit evidence. The auditor has to apply rationale and inquire why there is low difference of stock. The standard also requires that the auditor has to discuss among engagement team as to which elements of financial statements there can be a risk. If there is too much cash balance being handled by an entity, there is a possibility of fraud. There is a possibility. It may not be a fraud. The discussion has to happen among engagement team that this is one area the entity is dealing in with cash. What audit evidence can be taken so that to reduce the risk of fraud to an acceptable level. So the team can come to a conclusion that instead of verifying cash balance at the year end, as a surprise check, the audit firm will keep on verifying cash at regular intervals without informing the auditee. This will ensure that the risk of fraud is reduced to a very low level. The standard also says that the auditor has to be aware of unusual or unexpected relationships identified. Suppose suddenly the sales of the entities grows up by 400%, 500%, but at the same time there is a significant growth in debtors and there is no realization of debtors happening. So this is an unusual or unexpected relationship with the auditor comes across. The auditor has to evaluate whether there is any element of fraud, because usually this relation should not happen. The growth of entity should be a reasonable growth and act on a normal scenario. Entity's growth, if it suddenly happens by 400%, 500%, or suddenly the current ratio increases, or you find suddenly some other unusual relationship in the financial statements by ratio analysis, that needs to be looked into whether there can be any element of fraud. The auditor is also expected to take management representation. At the end of the audit, you may come across a situation that there is no fraud or there is no fraud on the part of management, but the same needs to be communicated to those charged with governance and also to the management through management representation. If auditor comes across fraud, it requires various reporting requirements. One is under section 143(12) of Companies Act. If the fraud amount exceeds certain amount, that needs to be reported to the central government. The auditor also needs to report to those charged with governance, and as part of its documentation, it also needs to document the manner in which the fraud has been dealt with, and if a CARO is applicable to the company, it will also require a reporting CARO, whether the fraud has been done by the company or on the company by the employees in the offices. So these are few sample formats which Institute has given. We will cover it when we go to the illustrative formats, sample audit line. The next is consideration of laws and regulations in audit of financial statements. So what this standard says is, usually audit is done in accordance with a framework. So when you do a company audit, you do in accordance with Companies Act. When you do trust audit, you will do in accordance with Trust Act, Partnership Act, and like so and so forth. So usually the auditor's responsibility is not to look at whether the entity has complied law and regulation. Auditor's responsibility is to see what are the procedures laid down by management to ensure compliance of law and regulation. How is management complying with income tax, GST, indirect tax, customs, and like the FEMA, all other laws. So it is not auditor's responsibility to ensure that the law and regulation has been complied with. This standard says that while you do an audit, you need to look at what is the company's framework of complying with all the laws. while verifying or during the course of an audit, you come across certain non-compliances. So that non-compliance can result in fines, penalties, litigation, and all other aspects. So the auditor's responsibility is to make sure that the resultant impact of non-compliance is appropriately captured in financial statements. If there is a fine or a penalty, interest if the management has accepted, that will be recognized as an expenditure. If the management is disputing it, it will go as a contingent liability. If there is such a major non-compliance of law, say for an example of an NBFC, if the NBFC has not complied with RBI directions, which itself recognizes as an NBFC, so RBI says that you need to maintain your CRAR of 12%, or you need to have a net worth of 2 crores. So if the non-compliance is of such an extent that the management's net worth has gone down, which results in the going concern of the management, going concern of the entity, auditor needs to bring that aspect in its audit report. The other aspects, it says that all those auditors needs to report all these non-compliances to those charged with governance. At the same time, it needs to also document in its working paper how auditor has ensured this standard on auditing or non-regulation. So usually what an auditor does, it lays down, it asks the management what are the laws it is applicable to the management. It takes a declaration whether it has ensured compliance. If it is not ensured compliance, what are the non-compliance? So income tax, whether all the returns have been filed, TDS has been paid on time, TDS return has been filed, indirect tax returns have been filed, and so on and so forth. Then on the basis of audit evidence, if auditor comes across anything, that needs to be taken into consideration. The next two standard I'll take together. During the course of an audit, the auditor comes across various observations. Some are small, gets rectified, some are larger in nature, which are discussed with management. But since the appointment of an auditor is by the shareholders, and the shareholders have appointed by the board of directors to look at the management of the company, this standard requires that the auditor has to communicate to those charged with governance with the board of directors and the audit committee that the auditor has done the audit in accordance with the standards on auditing, what was its planned scope, the manner in which it did, what is the timing it took, what are its observations. So the key observations of the audit have to be communicated to those charged with the governance. So those charged with governance, in a way, the board of directors can understand what has come out from audit which was not known to them during the conduct of management, during the conduct by the management. What also is sometimes communicated to those charged with governance, the key estimates, because an entity does a key estimate of various elements of financial statements. There's a gratuity, there are bonus, there is leave encashment. Then if you do an insurance audit, there's a entire actuarial valuation is a key estimate. So those key estimates, in a way, is a judgment of the management which is assessed by the auditor. So the auditors also present to those charged with governance that these are the key elements, key judgments in the financial statements which has been verified by the auditor, and if this key estimates change as compared to previous period, what is its impact, so that those charged with governance can also assess what are the key elements on which the financial statements are based and how they are changed. It has to be a two-way communication process. Those charged with governance also interact with the auditors, so it's always a two-way communications. Auditors independence is also important and has to be communicated with those charged with governance. Adequacy of communication process is important, and the timing is important. As I said, at the beginning and at the end, both time the auditor has to communicate to those charged with governance. A normal question will usually come is in case of small clients or in case of a small private limited entities, the meetings, usually the auditors are not invited. What should the auditors do to ensure compliance with this standard? What is required is whenever an auditor gives a draft audit report to the company to be laid before the board of directors or to the before a private limited company, a closely held meeting, this document should also go from an auditor, and it should be documented in the minutes of the company or the minutes of the relevant entity that the auditor has communicated to those charged with governance its various observations. Because what happens is, if you read the audit report, in the audit report there's a para in the audit responsibility section that the auditors have communicated with those charged with governance. So for private limited companies and small entities which usually do not invite auditors, this document should go with your draft audit report, and it should be ensured that we look at the minutes that the company has documented this aspect and this was produced before those charged with governance. So in case they have any queries, they can get back to the auditors. The next standard is a continuation of an earlier standard, not exactly continuation. It also says that the statutory auditor is not the internal auditor of the company. But however, while doing an audit, if he comes across any deficiency in the internal control, he should communicate to those charged with governance. That can have an impact of financial statements, that may not have an impact of the financial statements, but this standard says if it is a significant deficiency or if there is a material deficiency, the auditor should communicate to those charged with governance. At the same time, the auditor will also have to communicate how he has dealt with that deficiency while closing an audit, because it cannot happen that an auditor gives a clean report on ICFR, that the company has internal control over financial reporting. At the same time, it says that it has a deficiency in internal control which has been observed. So it's very important that the auditor ensures that when it says that it has observed deficiency, the deficiency should have been rectified before an audit report has been issued, or alternate internal control mechanism has been played by the management. If the deficiency has not been rectified and it is a significant and a material deficiency, the auditor has to evaluate whether it requires amendment to the opinion which the auditor issues for the company. The last standard which we are going to cover for today is on joint audit of financial statements. There are various audits which happen across the nation which are joint audit. So insurance sector, life and non-life, compulsory IRDA requires a joint audit. Then we have bank audits where there are multiple auditors, and large scale audits where there are multiple auditors. So this standard lays down what should be the scope of joint audit. The underlying of the standard is to lay down that both the joint auditors have to ensure compliance of the standards. So the basic principle the standard is laying down is the work has to be mutually agreed. The work has to be mutually divided. Ideally, it should be divided in identified units or specified areas, like revenue and related will be done by one, purchase and related will be done by other. But if it cannot be divided, then it should be divided in the form of assets, liability, income, and expenses. Critical areas should be done by both the auditors. So if in case of an insurance audit, the actuarial valuation involves the liability side and the investment side both. So ideally, it should be covered by both the auditors. So both the auditors have to decide what are the critical areas, like the disclosure framework or the reporting framework, Schedule 3 framework. The manner in which it has to be reported has to be covered by both the auditors. After both the auditors have decided, they should document the division, and it has to be communicated to the client. When I say the client, it has to be produced before those charged with governance, because they can then decide whether the division is equal, whether the division is reasonable, and whose responsibilities for those respective areas. Each auditor is responsible only for that area, for the undivided. However, they are jointly and severally responsible for undivided work. So if there is any undivided work amongst themselves, both are jointly responsible. They're also responsible for the nature extent of audit procedures, compliance with disclosure requirements, audit report, both are jointly responsible, and matter if which is brought to the notice by one of them, or if there is an agreement among them for that matter. It is not necessary that if a matter has been brought, the other auditor has to agree, but if a matter is brought to the notice of one or by all of them, then they are jointly and severally responsible. Now, how does the reporting happen? Normally, joint auditors give a agreed report. So whenever you find a joint audit report, you will see all auditors signing under a single report. However, this is not a compulsion. Each one of them can express his opinion through a separate report, but usually this happens when a joint auditor is not agreeing to a view of the auditor, and the standard says it is not compulsory that if 3 auditors have agreed to a view and it's a majority of the view, the other auditor has to agree his view. So usually this is not found, but you will find where a company which is highly qualified or given a disclaimer of opinion, you can go through that. There are companies which in the last year happened, both the auditors gave a different view because they qualified on the same matters, but their audit approach was different, so they issued a separate opinion. This is what I conclude with the presentation. I'd like to quickly take you through the audit slides. So in a way, audit templates which I've shared with the Ahmedabad branch. I'll quickly walk you through that. I'll not read word by word. This will be shared with you at a later stage. So if you see through, can I? So if you see through this Word document, what we have documented is model working papers, what should it contain, then various things, audit program, then there's a format of audit engagement letter. So I'll not read word by word. I'll just take you through the headers in a way what we have shared as an audit template. We spoke of audit engagement letter. So we have given a sample of what an audit engagement letter should look like. Then we have given a template of acceptance of formalities checklist. We spoke of before accepting an audit, auditor should evaluate what understanding of accounting process, general audit program, then materiality template, performance materiality template. Then you have identification of material transactions, disclosures, and so on and so forth. So I'll not read word by word. This will be shared to you by the Ahmedabad team. I'll now request if we want to have a question answer session or.
Yeah, I think if anybody has question, they can put in chat box, and from chat box we can basically run through question to faculty. Meanwhile, you can type questions. I would like to again say, Jitendra, thank you. I think the most critical aspect is that looking into the templates, because the template which you shared on letter of engagement, the template which you are going to share on the point program, and a lot of other things which are going to be useful to the SMPs in their practice. So what we do that we'll share these templates with all participants, and these are in Word file. So it will be very useful to all members. They can straight away start ensuring that they are able to implement the templates in their office, because the objective will be fulfilled only when these has been converted into the real practice. So what we want all our participants to ensure that just start using it. If I just share about my experience, that it is always difficult to think on these things and then then think that when I will start. Just start, and over the period the practice will be developed. System will take a little bit time to be developed. However, just start doing it initially, whatever maybe you can do it, and over the period refine it further, refine with your staff articles, and then make it robust for your own firm, because each checklist, each templates can be different for every firm. The objective of giving you ready-made templates are just to start and base. Then you work on that and make your own templates. I think we have not received any question as far as this concern. So basically, I request Jai Sheth to offer a word of thanks to Jitendra.
Well, on behalf of Ahmedabad branch of WIRC of ICAI, I would like to propose sincere vote of thanks to Jitendra Karamchandani ji, the faculty for the session, who has taken his precious time and given us the insights, especially the formats, which are very much crucial for us to prepare. Because usually what happens, generally we spend too much time to prepare all these checklists, but we have given a tremendous job and given all the templates on hand. So we are very much thankful to you and look forward to hear from you in coming time. Thank you so much.
Just to add what Jai has told, that Jitendra has even taken a pain to ensure that the standards is to be shared with practical aspects, because a lot of time we have discussed internally even today also, and a lot of times earlier, that we want to focus more on the practical aspects. That's what he has done wonderfully. He has really talked about a lot of examples, a lot of things where it can be applied with. And from that, we need to really apply. Even if 10% of this something, if we're able to add to what we are doing in our practice, I think then the objective of the session has been met. So with this, Jitendra, thank you so much from bottom of our heart. And to ensure that you come here, you virtually come and give your knowledge and experience. And at Ahmedabad branch, we all members are starting to look at you again in future. Thank you so much, all of you. Now we end of the meeting.